Hello and welcome to Bazaar Morning Call. We're coming to you live from the Motilal Oswal CNBC TV 18 studios. I'm Prashant, with me my colleagues Sonia and Nigel, and we're beaming, we're smiling. It's a Friday. Good morning, guys.
Good morning.
It's been a grinding week, right? But it's coming to a close, and things are looking better.
And it's Friday the 13th, huh?
Oh yeah, it's Friday the 13th.
Generally, things don't really pan out that well on Friday the 13th, right?
But this time it's going to be good.
We break the cycle.
It's going to be a good Friday personally as well as for the markets.
Absolutely. Well, let's keep our fingers crossed, and let's hope that it's been tough. Last more than a few trading sessions has been tough. Let's hope this is a little better, and it looks like it could be better, right? So what do we have? Let's just start from the very beginning. We got big reactions from US market overnight. When I say big reaction, I mean two specific markets. One is the rates market. US 10-year yields, this is market interest rates, they were down 10 basis points. That's huge, right? Big. Now we're at about 3.44 or so. The dollar index is now dropped another almost a full 1%. It's 102 and change. So there is a continuous drop in the dollar as well, which is at some point, I mean, there will be the accumulated impact which will start to show up. So far, it has not. On equities, it's, I would say mixed. It's positive. I mean, the Nasdaq was up 0.6, the S&P was up 1/3%. But could it have been bigger compared to the reactions we've seen in the dollar and the yields? I would have thought so, but it was not. Maybe the market is already starting to get a little thoughtful about the second-order impact of slowing inflation, which is, I mean, a consequence of slower growth, and growth matters for equities more than it matters for the other two things that I spoke about. In any case, the CPI number yesterday, and I think the debate will go on. Many are saying that this is not soft enough, and if you look at the underlying print, it still could be high going forward, etc. But I think for now we can all agree that this is enough to keep the peak CPI, peak Fed rate narrative intact. I'm calling it narrative because, I mean, we need a few more data points to prove this, to kind of have this as a settled issue. So I think that is the good news right now, that nobody's now really going to jump and say, another 50 basis points in Feb, another 50 basis, that is done. Mostly it's 25 in Feb and 25 for how many ever there are left through the course of this year. So that is, I think, the positive out of the data point. Here in India, yesterday, the Nifty broke below the December low of 17,774, but it closed well above it, right? I mean, we saw a very large bounce and we closed well above it. You need a positive close today. Most definitely you need a positive close today. That will, I think, give a signal that the market is trying to negate the downside, the downward trend that we've been seeing. So a big bar from the lows to the high. And then if you get a positive close today, I think that is good news, technically speaking, just price action wise. On the downside, I mean, those same levels, which is the December low and then yesterday's low, which was just 15 points below the December low, 17,774, 17,761, I think should hold. That's the level to watch on the downside if selling comes again. On the way up, the 20-day moving average on the Nifty stands at 18,093. And above that, if you're able to cross that, you've got the recent high, which is Jan 9th, which comes in at 18,141. They seem far and seems unattainable given the price action recently. But the market gets a little bit of mojo back, and it's entirely possible. These are not very sort of large, big levels we're talking about. This is near term. The Bank Nifty bounced yesterday without breaking yesterday's low. So actually it did better than what the Nifty did yesterday. The big support for the Bank Nifty comes in at 41,569, which is its December lows, 26th of December low for the Bank Nifty, which still holds. On the 20-day for the Bank Nifty on the upside is 42,728. That's the first number to take out. And above that, you get the recent high, which was made on the 4th of Jan for the Bank Nifty. That is at 43,578. Again, these are all very near-term levels, but I think these are important markers that the market should take out on the upside, and kind of these lows that we've had for the last, 2 or 3 weeks, all the way from the late December month. I think those should hold. I think that would be good as we wrap this week up. Guys, hi, morning.
Hi, morning. Absolutely. And, there are plenty of positive cues, right? And that's why we begin by saying that perhaps Friday the 13th may not be too bad for the bulls, because there are more positive than negative cues this morning. In local cues, of course, all eyes will be on the tech stocks. And we had some good numbers coming through from the likes of Infosys, HCL Tech, better than what the street was estimating. Cyient delivered a very good set of numbers as well. And the big positive, of course, from an Infosys standpoint is that amidst all of these challenges, they went ahead and scaled up their guidance. So, earlier the guidance was about 15 to 16% on the revenue front. Now that's been revised higher. I went through the conference call highlights as well, and in that they do highlight that there are cost pressures, there are economic concerns, and that is hitting the client side. It's impacting discretionary spends, but amidst all of that, they are standing tall and hence revising their guidance. So I think the street will give it 2 thumbs up. HCL Tech, after that mid-quarter scaling down of guidance, actually outperformed, reported a beat on revenues and on margins, so the street would like that. And it was a really strong quarter from Cyient as well. So after these 3 companies, I'm looking forward to names like Wipro that come out post-market hours today. There's Persistent Systems as well. So the entire IT pack could stand tall today. The other positive is that FI selling has reduced quite a bit. So yesterday there was just about 1,600 crores of selling compared to an average of 2,500-3,000 crores that we've seen in the last many days. DI has bought about 2,100 crores or so. And it was a strong global handover, as Prashant was just mentioning. Cooling off of inflation, positive local cues could aid the market. In fact, talking about our inflation, our own inflation, the Indian market inflation was also pretty good. Retail inflation cooled off to a 12-month low. The IIP data has gone up. And the Nasdaq, by the way, is up for 5 straight days. So we have more positives than negatives. The big question for me is, will this 17,800 level provide a good support, a good floor for the market, considering that we have positive data points? But what are the F&O cues indicating?
Well, Sonia, one factor that I want to highlight from the global cues is the dollar index. That's cooled off to around 102. And from an emerging market standpoint, that's a positive reading. So let's see how that plays out, because India has been relatively underperforming just for a couple of weeks or so. Yesterday, the weekly expiry came to the bulls' rescue yet again. Last Thursday as well, we had a 100-point recovery from the lows, and this time as well, it was no different. The Nifty Bank, it seems to be struggling to find its form. Nimish was telling us a hedge fund is selling some part of what they have, and maybe, a couple of funds are offloading out there. So that's what's causing the underperformance. The hope is that gets absorbed, and then we look ahead from there. For me, the positive, though, was the mid-cap and the small-cap indices. Everyone was fixated on what's going on with the Nifty, but the mid-cap and the small-cap, in fact, the small-cap almost ended in the green. So that's pretty good news. Foreign flows, well, our flows were a little bit skewed because of a couple of large trades. But the FI's return to China is quite startling, because we are just a couple of weeks into the year, and they've almost bought close to around 50% of what they bought in the past year. Remember, December, we saw a big flow towards China. And so far in 2023, well, they bought close to around half of what they did in the entire year. Let's see how that pans out, because the Indian markets, the FIs have been selling. The FIs on the F&O market here in India, well, they added some short positioning. This is not a bad thing. Short positions move to around 62%, or if they don't get the follow-through, they're going to be trapped on the wrong side. The question is, which way of 17,900 will it swing? Because the 17,900 call as well as the 17,900 put, both of them were very, very active. So I'm just plugging in the numbers out there. 17,900, you add close to around 300, 350 points out there. So the broad range you're looking at is a 400-point range. Downside 17,750, and we're closer to that level. But if we can get a relief rally, maybe we go back to around that 18,150 odd mark. Evidence indicates you buy in that zone, you make some money. So I think you better stick to that. And buy the dip today will be a better strategy rather than chasing that morning opening. 35-point bump up, 40-point bump up, I think that gets sold into at some point of time. Infosys has around 7% weightage on the index. That's going to bat for the bulls. But what happens to the Nifty Bank will be important. Buying the dip, a more prudent strategy than chasing this open. What else, Prashant?
Well, Nigel, thanks very much for that. That actually has always worked, which is don't chase right out of the gates, unless, of course, you've been in a very strong, bullish, trending kind of a market on the way up. And of course, in a strong bear market on the way down, which is not where we are in. This is more consolidatory, so as to speak. Sonia,
I just want to mention one thing. Tomorrow you have HDFC Bank's numbers. So, this is, of course, the last trading day when you can trade into that bank. And as Nigel was also pointing out now, the bank Nifty assumes importance. Ahead of that, does HDFC Bank see buying? Because the expectation is that the numbers will be good from the private banking space. So just want to put that cue on board as well.
Oh, absolutely. That's a big one. Well, before we go any further, let's quickly run you through what is lined up here in the first hour of the show. We will get you updates from markets across the globe. Mark Matthews of Bank Julius Baer will join us to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. And at around 8:30 a.m., we'll do a fundamental market analysis with Anand Tandon, who will be with us as always.
All right, let's do one thing. Let's get you some